G'day taxpayers. The Trump tariff issue is a rapidly moving feast, as we saw a few hours ago, and it's hard to know where the dust settles from this, but the pause, the postponement of some tariffs for 90 days from Trump has seen a pretty dramatic market reaction. Stocks up, bond yields down at the long end of the curve anyway, so a much flatter yield curve, and yeah, it's sort of a strange thing, but a few things to note that, Trump's only been in office for 80 days, so the 90-day pause will not be how these tariffs are going to be sitting in 90 days' time. It's almost inevitable that this rapidly moving feast that we've seen from the US president will move again and again and again and again. Which way they move, who knows? I don't think he would have a clue about what he's up to at the moment either. So I think there's a bit of premature extrapolation on what this might mean for markets and the economy. One thing I do know, and I think everybody agrees with this, is that the effect of the uncertainty of the tariffs that are in place. Don't forget, China's got a tariff of 125%. There's still a 10% tariff with everybody else. So it's not as if the tariffs have been abandoned altogether. They're just not quite as aggressive as they were 24 hours ago. We do know the consequences for global trade will be negative and by a large amount. We do know that with lower global trade flows, world GDP will be materially weaker. China will be hit very hard. The US will be hit very hard. That the global bottom line economic growth story is still one where there's downside risk. It's just a matter of how big those downside risks are. So when the RBA is sort of contemplating what it might be thinking about the growth outlook, it must be revising its economic growth forecasts lower from what it had in February. Given that inflation's undershot its forecast, they could well be lower down a bit on the back of the weaker economic activity. So they're still into the melting pot, and it's still an unambiguous and unquestionable case for the RBA to be cutting interest rates sooner rather than later, and by more rather than by less. We'll see what happens. We get some economic data next week in Australia in the labour force, which will be interesting to see whether that minus 53,000 in employment last month's validated in any way. But for the here and now, the Trump tariffs are still hugely negative for the global economy. Yes, everyone's got a little bit excited by the pause. Yes, there's been a big stock market and bond market reaction, but I'd be very cautious whether these trends will stay in place, and be very cautious about whether the tariffs stay the way that Mr. Trump currently has them framed. In fact, I bet they won't be.